Good morning, everybody. We're going to get started here in a couple of minutes. If you guys could let us know if you can hear me okay, that would be awesome. Just to make sure, as always. But I think we should be in good shape. Good morning, everybody. Yep, we are about to get started. Very good. Thank you for the audio test. We're still getting used to this morning show here in terms of the setup, but so far things are working pretty good for the first few days. Thank you all for being patient with us here as we get in the swing of things. But feedback has been really good so far. So again, thank you all for being supportive of the format. As we get started here in just a second, I do just also want to encourage everyone to give us feedback. You know, if there are things that you would like us to cover going forward, let us know. You know, if you would like the format to be somewhat different, you know, we are here to make changes. That's the whole point, is to make this for you, make this something that helps you, you know, learn more about the markets, or at least the way we look at the markets, right? There's different approaches to markets, of course, right? So that is what this is all about. So it's right at the top of the hour right now. So I would say let's get started. Again, good morning, everybody. Happy Thursday. We launched this morning show on Tuesday this week, and we are starting next week, going essentially Monday through Thursday. There will, of course, be days when I'm traveling or I've got meetings, so it's not going to be every single week, Monday through Thursday, but most weeks. And so that's the schedule here for the time being. I'm going to make my little video window a little bit smaller, and I'm going to put it down here, so hopefully that will help you see the charts as good as possible. Well, on our first day, on Tuesday, as we kicked this off, the inaugural session for our Set the Market live morning show, we talked about general dynamics. We looked at that particular stock, which we thought that it would stand a pretty good chance here in this environment where we are likely going to see a little bit more weakness ahead for the equity market. And after a bit of an intraday reversal yesterday, we basically ended up snapping back more or less with the broader market. And then what we talked about yesterday on day two is we talked about JP Morgan as a stock that through many metrics looks like it'll have more downside. Remember yesterday we had a broad market upside, and we talked about how we could see JP Morgan probably fall towards 190 or so. We have a range of about 195 to about 187 or so as the downside targets where support could come in. So those are a couple of things we talk about. What I'd like to talk about here today is actually two specific stocks that we want to stay away from right now. In fact, actually three of them that we want to stay away from. Then I'd like to pack in gold and silver quickly because they continue to act well and we've liked them all year. And then that'll get us through these 15 minutes of morning setups. So first of all, I want to talk a little bit about, and you can see the futures here, by the way. This may be a little bit small on the screen, but what I'm seeing here this morning is that silver and copper and some of the other commodities are actually leading the pack here this morning. So, we do like this idea of having more upside in that complex, and so we'll talk about that here in just a couple of minutes. But first, let's go through a couple of stocks that I really want to stay away from for the time being, that I really would like to buy, but I want to stay away from right now. And the first one here is going to be Boeing, and I'll we can talk about this from a sort of fundamental perspective. We can talk about it from a technical perspective. But if you take the whole thing together, the reality is that there's still a lot of uncertainty around the stock. So people have been trying to bottom pick this stock here for the past few months, and it really hasn't worked. One day it will work. I just don't think we're there yet. And so this is where I want to respect that uncertainty, and I want to respect what we are seeing from a trending perspective. On our market roller, again, this is our trend following tool that's really at the core of our sort of structural analysis. And you can see the stock has essentially been going in and out from bearish trends to neutral trends, which is the black background, to now once again a bearish trend since April. Now, the stock hasn't done anything. It's literally exactly at the same spot now where it was more or less in April. It moved up 20% and then right back down. So it's nowhere. And again, it really tells us how important it is to respect the trend. At some point, that trend will change. It's not changing now. Now, if you're wondering, what might be a point where this gets interesting, I can give you some idea of what we're looking at. But again, that's all a little bit unnecessary because we need to see the narrative start to change a little bit. But at this point, again, the positive news can happen any day. It's not happening yet. What we would need to see is some sort of a change in this trend that just hasn't happened yet. So if we turn this into a weekly chart, you can kind of see where some of these support areas come in. Some of these, this is basically since 2009, and you could kind of draw some lines like this. So maybe the stock has further to go towards, the 140s. That would be my guess. But again, I just, the point is I see no reason to buy it just yet. Now, some people that are more privy with options are trying to sell puts here below the market. That is one way of doing that. One could sell puts way below the market using options that expire, a month, 2, 3 out. One could sell bull put spreads if one wants to buy the stock at cheaper levels. People do that. To me, there's not enough story here yet. Once I start to see a story that I can kind of hang a hat on, I'll be happy to sell some puts or sell some bull puts. At this point, there's none of that, at least in my view, right? Of course, different people have different views. So I see no reason to do anything. So that's the first stock that I just don't want to touch right now. Not because it's, and I should say, I should end on this particular stock. Boeing is ultimately systemically important for, the U.S. government. And so they're not going to let this go. At least I don't see that. Again, maybe people have different views. So I do think at some point this will be buyable. I just don't see a narrative yet to even, forget buying, to even sell puts or bull put spreads where I would get, let's say, assigned the stock if it goes lower. I just don't see that yet, but I am watching this. Maybe that's coming later on the fourth quarter. I really don't know. It's one I want to stay away from for the time being. But again, very interested going forward. The second one, and I mentioned this one to Inner Circle members yesterday, is Occidental Petroleum. Now, some of you, maybe hopefully a lot of you, know how bullish and constructive we are on the energy sector. So that is one of our favorite sectors going forward, not necessarily today or tomorrow or next week, but through a multi-year lens. We are very bullish energy. There is a huge underinvestment in energy, in the energy sector. We look at the geographical demand, the energy that's needed to build out new energy infrastructure, all that stuff. And there's a huge story there. So we really want to buy something like Occidental Petroleum. It's just not there yet. Again, very much like Boeing, I don't see a reason to own the stock or to buy the stock fresh right now. I like it. I really do. I like the story. I think ultimately this will be a great story. Warren Buffett, or at least Berkshire Hathaway, seems to share that view. But I just don't see it right now. The catalyst, the reason the stock has been going down over the past number of weeks, is the same reason why ExxonMobil has been going down. Is the same reason why the share price, or why the price of oil has been going down. The economy is cooling at the margin, and that is getting people to get out of some of these cyclical things a little bit. But I think ultimately this will be a huge buying opportunity, but I don't see it just now. So very much like Boeing, again, obviously a totally different story, but very much like Boeing, I will want to be a buyer here at some point once I see a catalyst. I just don't see a near-term catalyst yet. Momentum is bearish. If we look at our momentum work on our momentum indicators, the TST trender, we just don't see any catalyst here just yet, or certainly momentum yet bullish side. If you're looking for levels, what I can tell you, there's a couple of levels that I'm watching very closely. I'm watching more or less the current levels, somewhere in the low 50s, and after that I'd be watching levels in the low 40s or even in sort of the mid to low 30s. And the reason why those levels are important is very simple retracement levels. So if you take the low from 2020, so basically COVID lows, and we take it up to the highs of the year 2022, we are currently at a 38.2% retracement. It happens to coincide with the 200-week, not 200-day, 200-week moving average. And so that's something that's interesting. But again, I don't see any momentum having changed. I see no narrative changed. Once that happens, we will want to buy this. We will certainly be talking about it. We will alert you guys if you're Inner Circle members and so on and so forth. But very much like Boeing, we would be starting off then with selling puts, selling bull puts to kind of build some sort of a position. And then once the momentum starts to change and really starts to change, we would look to trade that from the long side and build core positions long. it's not there yet. So I'm basically, what I'm trying to do here is give you a watch list. Boeing, Occidental Petroleum, totally different reasons, totally different stories, at least in my view. But those are two things we really like. I promised you I would give you a third one that I want to stay away from. And this one kind of correlates with some of this stuff, but for different reasons. And that is the JETS ETF. Now, this thing is choppy and it's not as clean as we would like it to be, but we do think that global air travel demand is going to cool. And if anything, this is more tactical, more of a trading idea that I'm giving you here. Remember, none of this is recommendations. This is purely informational and educational. But we do think there's an opportunity to potentially short something like the JETS ETF, which is the sort of the global airlines ETF. Again, we need to see momentum change. Momentum is still bullish since that August 5th low, but we do think that momentum could turn bearish, and then ultimately we would have an opportunity to play this on the short side for maybe a revisit of those August lows. Just a trading idea. So between Boeing, Occidental Petroleum, and here JETS as a tactical idea, I'm hoping this is giving you a bit of idea, a bit of perspective for a couple of ideas that we are watching very closely at the moment here. If you're wondering, technically, I think everyone can see this. There's a lot of overhead resistance. We can doodle some lines on this chart that I think these kind of draw themselves. You can see resistance here, what used to be support. We've got a bunch of moving averages on top, the usual, the real basic technical analysis stuff. Last but not least, I have to address something that's moving in the market literally right now, and that is the gold and silver complex. A lot of you guys have been following us and our work here throughout the year as we've continuously talked, very bullishly about gold and that whole complex, and there's a whole much larger story around this. But gold futures here, as you're looking at them right now, are kind of coiling. They're up about half a percentage points, about 55 basis points here today, here right now. But I think ultimately this is starting to look more and more like it wants to break out higher. And so we want to watch this very closely. And very interesting is actually what silver is doing. In fact, I just had silver up here on my other screen, and we mentioned this also to our clients about a week or a week and a half ago at this point. We think it's possible that silver starts to play some catch up. So if I were to draw a very simple line here of silver and gold, and I'm going to just do two simple lines, we'll use a linear chart, then I see that gold hasn't had a big move. Gold miners have not yet had it, and silver hasn't had it either. So let me draw that on the chart so you guys can all see this. And so, two different scales, obviously, but again, you can see gold in the blue line has already had a big move out of its breakout. So that's essentially this move here. This is the breakout, and gold has had that move. Silver has not. Silver hasn't really had a breakout like that. I mean, you could argue maybe this, but that's, I'm not quite sure that counts because of the volatility. But silver, for the most part, has been consolidating, and so that gold to silver ratio is getting more and more interesting for potentially another leg higher in this. Now, remember, this stuff is volatile, so I'm certainly not here to talk, position sizing or anything like that here. But I like the idea that silver might start to be able to play some catch up. And the way I'm watching it here, the way I've been tracking it for the past number of weeks, I see an increasing likelihood that silver could start to do some good things on the upside. So if we take an absolute chart of silver, let me quickly bring that up, and I will make this a candlestick chart. Again, silver is volatile. Let's not make any mistake about this, but I see an orderly behavior. I see silver breaking out more or less with gold, but then checking all the way back, and now it's trying to get back on its horse. You can see where it found support, very much where technical Asset 101 would, and now it's doing that once again. So if you watch these things intraday and you see when the bids are coming in, there's a pretty good story here that we can tell. And again, this falls into a much bigger story of silver being something that probably has a lot of legs for, like a 5 to 10 year period. I'm talking here more near term right now, but we are very constructive on gold, silver, copper, hard assets as a new set of portfolio allocation that a lot of people are not in right now, and that could actually do way better than anything that they're in right now. But that's it sort of for a near-term perspective right now. So if you guys have any questions right now on this, I'm happy to stay another couple of minutes and go through this. So again, the recap, we talked gold, silver, we showed you that ratio in terms of, or at least in terms of silver being able to play catch up. Two stocks we want to stay away from for right now. Long term, very much like them, but right now there's no catalyst yet. That's Occidental Petroleum. Again, we said we would wait for a catalyst, a narrative change, and then look to start selling bull put spreads or just puts to see if we can get the stock put to us and own some. And then the same thing with Boeing. Again, I think ultimately this stock will come back, but it needs a narrative, and it doesn't have one right now. A lot of people are scared of the company of that stock right now for the reasons of the headlines, which makes sense intuitively to me. But once that changes and we see a reason to change here too, the strategy would be very similar to what we would be employing in Occidental Petroleum. So that is where we are. Nicholas is asking, does your metals outlook show inflation? Yes. So on the metals, like that is a very big story, Nicholas. The metals story is much larger than just the near-term stuff. I mean, this is a higher inflation for longer. We're in the camp of a 3 to 5% inflation rate over the course of the next 5 to 10 years. That is a very different portfolio than what most people have right now. Most people right now are piled high into growth stocks, all the same of them. We think there's a really high likelihood that portfolio is going to significantly underperform going forward. So that is the reason for that. What is this? Okay, there you go. And then C Long 777 is asking, what about GD? We talked about GD just at the beginning, on top of the hour, quickly. And so GD is still, again, nothing. It's unchanged from where we talked about it on Tuesday. Still like the idea for all the reasons we talked about on Tuesday. So that's it. Thank you, folks. Have a good start to today. Hope it's helpful. If you don't like this, by the way, don't show up, right? If you do like it, give us some positive feedback that we can make it better for you. But thanks for joining, and we'll see you again here on Monday morning. Take care, and thanks for joining.